Now, Mark, the other question that I had when I was reviewing all this in my own spare time, mind you, was that, and this is a burning question of mine, is if I was looking at an investment myself personally, and I know you've done this in the past, but residential or commercial, I mean, which one's the better one to go, really?
Well, they both have their pluses, and both have their minuses, I guess. Personally, I deal with residential property. One thing about the residential property that I see as a big plus is that in the residential property market, it's not dominated by investors. Does that make sense? It should make sense to people pretty easily. Go, oh yeah, right. There's all those owner occupiers out there. So 70% of the assets within that asset class, the property investing, residential property investing, 70% of the people in that market are homeowners. So as a consequence, we don't see the plunges that we see in markets that are dominated or 100% invested, such as equities, share market. So you can see that in a share market, if we've got some issues around European debt crisis or that sort of stuff, that impacts on people's sentiment, and we'll see a crash as we have recently. And we've seen that it's struggled to lift again. So that stuff doesn't happen in residential property. So if we have a bubble burst in residential property, as some commentators like to use, all it simply means is it stops going up. It doesn't mean that it reduces it by 50, 60% or 100%. It may reduce by a couple of percent, but it's got that floor in it that it won't drop away to nothing. So you need to balance up your portfolio in that regard, so that if we've got some residential stuff in there that's safe and we know that the bottom's not going to fall out of it, ticks all the other boxes in terms of income and growth, then why not use that? Commercial property can often get you better yields, but it has the higher risk factors in terms because it's based on business, being commercial. So if you're a tenant doing a business, one goes broke, their market conditions change, you may find that you've got a huge period of vacancy, which is, and that may be okay. It depends, and you just need to weigh up the yields that are coming through versus the potential risk around that. So I see residential as a lower risk option, but as we just mentioned in an example on a previous video, you don't need to settle for just kind of average residential. We can get extra bits in there that make it very attractive.
Okay, so we've got residential that's capital growth orientated, and we've got residential that's actually yield orientated, so it's cash flow positive.
Yep.
And then with regards to commercial, it'd probably be okay to do some commercial as long as you understand that there's some volatility behind it. But as far as a bubble, there's no actual bubble, because when a bubble bursts, there's nothing. But you're telling me that there's actually a threshold left after a seemingly expensive downturn.
Yeah, well, people would have experienced that in their own lives. They might find, people know what their house is worth that they're living in. So they've already experienced that, and that's right, yeah.
Right. So just out of curiosity myself, if I was a medical professional, and my mother would be so proud, but if I was a medical professional, and we were sitting down and I had some money to invest through equity, my property or what have you, regardless, would it be fair to say that I could probably look at a commercial prospect as well?
You could look at it, but I first I'd like to ask the investor the question: what have they already got in terms of assets, and what's their their plans or their desired outcomes for that investment? And we need just to balance up the risk to match the client. So in a roundabout way, I'd say look at it, but I generally lean towards the residential because it's a safer thing, and it's just we can get better results generally.
So effectively, you'd work with me, you'd work with my advisors, and you'd come out with something that would be specific to me.
Well, I think that's the way that property investment advisors should work. Not many do, but that's